Guys, Roman here with episode 13 of our financial statement analysis videos for the German industrial stock list. Um, Without further ado, we're going to get straight into the key ratios. If you're new to my financial statement analysis videos, what we do is we analyze the top 3 financial statements that are relevant to a company, those being the income statement, the balance sheet, and the cash flow statement. We look at the key factors of each statement, for example, profit margins, net income, total equity, things like that. And we try to determine or have an overall image of how well the company's done financially in the past, up to the present day, and how well it will do in the future. So without further ado, we're going to start off with the key ratios, and we're going to get into the income statement and then end with the cash flow statement. So the market cap of the company, which is the overall price of the company, is 1.01 billion euros. The PE ratio, which is just the price to earnings ratio, so it's the price of each stock divided by the earnings, which is the net income, which is then divided by the amount of shares outstanding. That kind of determines how pricey the stock is, or on average how many years it will take for you to to get a return on investment, considering that the company grew at the same rate, adjusted for inflation. And yeah, so the revenue figure, which is the overall sales of the company in the last financial year, was 1.47 billion euros, which is larger than the overall price of the company. So we're going to see later on whether or not the company's made a similar profit margin or net income. If so, then the company is doing very well, but also it means that the company is classified as a net-to-net investment. So that means that the company's in its entirety has been sold for less than what the company has on its books, so less than its assets, so less than its total equity. So the dividend yield, which is the amount of cash that was paid out to shareholders in the last financial year, was 5.38%, which is really good. I always say that 5% dividend yield is good enough to classify a stock as a dividend stock. The earnings per share was 1.57 euros. The beta level was 1.3, which is good. That's about 30% above the market average of 1, which is still quite stable. The income statement is what we're going to start off with. So as you can see, the graphs, the light purple figure represents the revenue for the last financial year, or for the last 3 financial years. And as you can see, it's pretty consistent, apart from the 2020 financial year where it was a bit lower. The 2021 financial year was a bit higher than 2019, which shows that there was a recovery, as well as a net gain, or a little bit of growth. So the profit margin in 2019 was quite stable. It was about, I would say, about 5%, which is good. It dropped in 2020, but also the revenue figure dropped also. So it was the revenue figure and net income figure dropped proportionally, but the net income dropped at a higher rate, or a higher percentage of the net income dropped from the 2019 financial year to the 2020 financial year than the revenue did. So that was, it looks like the revenue figure, the profit margin figure for 2020 was less than half of the profit margin figure for 2019, which is not a good trade-off for I would say 5% max drop in revenue sales. But anyway, the 2021 financial year, as we saw earlier with the revenue figure, the company managed to recover and grow a bit compared to its 2019, which was the strongest year sales figure. And the profit margin was also larger than the 2019. So that was the largest profit margin it had made in the last 3 financial years. It looks like it was about 6 or 7%, which is definitely very strong. Of course, a profit margin closer to 10% would be even better. But next year, if it continues the growth that it has shown in the past, then hopefully we'll get to that. Let's get to the balance sheet, which shows the total liabilities of the company, which is largely made up of the debt that the company has. So, for example, cash and/or capital that the company has borrowed from other institutions in order to fund its operations. So the light purple figure in this case represents the total assets, which is capital and liquid assets, and short-term assets and long-term assets. and the dark purple figure represents the liabilities. A healthy company, I would say, would show, well, the dark purple figure, which is the liabilities bar, would be about half of the size or half of the height of the total assets bar. But as you can see in this case, the bar, they were almost the same height. Not, well, to a large degree they are. So I would say around the total liabilities figure is about 80% the height of the total assets figure, and that is consistent over the past 3 financial years. What does that mean? That means the debt to asset ratio, which is a representation of the liabilities to as a ratio to the total assets what the company controls, is very, very high. What does that mean? The company is classified as either over leveraged or very highly leveraged. It means that the company's borrowed a lot of money compared to what it actually controls or what it currently owns. And of course, when you borrow cash or capital from another person or an institution, you have to almost all cases, pay interest when repaying the loan. So depending on how long the company has had this debt slash liabilities amount on its books, and how long it continues to have those liabilities, the company will have to pay a lot of interest. So it will grow each year because of inflation and another inflation related events. So let's get into the cash flow statement, which represents the how the company manages its cash, how it generates cash, and how it distributes its cash. Let's check this. So the starting line is the net income line, which was 228 million in 2021, and in 2020 it was 123 million euros, and in 2019 it was 221 million euros. So there's growth from 2019 to 2021, but from 2020 to 2021 there was quite a loss. Let's get into the cash flow from operating activities, which was 315.87 million euros, which is really good. The cash flow from investment activities was 227 million euros. They had spent on capital expenditures and other cash flow items. 187 million euros was spent on capital expenditures. So that goes into expanding property, plant, and equipment. The cash flow from financing activities was 84 million euros, which was spent on dividends paid, which accumulated to 20 million euros. Retiring debt, which was sorry about that, which was 1.17 million euros, and 37 million euros, which was spent retiring debt, so eliminating debt, which is definitely a good step. I just want to see if that is a consistent trend, where the company is. Yes, so as you can see, in the past 3 financial years, 2020 it reduced its debt by 84 million euros, and in 2019 it reduced its debt by 85 million euros. So it's definitely consistently reducing its debt by quite a large amount, just slightly under 100 million euros each financial period. So that is the cash flow statement. The net change of cash was 4.17 million euros, which is a quite good figure, but it definitely needs to be stronger considering how large the company is to be able to attract shareholders. The 2020 financial year, its net change in cash was 39.17 million euros negative, and in the 2019 financial year it was 45 million euros negative. So with regards to net change in cash, I feel like that's the only positive uptrend that we've seen in relation to the financial statements representing each financial period. In 2019 it was 45 million euros negative, 2020 was 39 million euros negative, and in 2021 it was positive as well as plus 4.17 million euros. So that's definitely a positive trend. Apart from that, I'm going to close this video. Thank you guys for watching. I will see you in the next one.